Hi everyone, and welcome to today's morning report with me, Richard Perry, Markets Analyst at Handtech Markets for Monday the 9th of June. We're starting the new week on a fairly decent note actually. Trading in Asia was positive overnight with markets fairly strong. That followed on from another record close on Wall Street over on Friday night after that payrolls number that was pretty much in line with expectations, but gave investors a fairly positive outlook. As I said, these Asian markets pushed on a little bit. That was helped by some positive market data as well, with China coming in at plus 7.0% for its exports for May. That beat the 6.7% expectations, and also Japanese Q1 GDP came in at 6.7% ahead of the 5.6% expected. So there was a fairly decent outlook across the board in Asia, and that attitude has been followed through into European trading, with the FTSE and DAX and CAC all very slightly higher. FTSE around about 0.2% higher. DAX just shied away back again from that 10,000 figure, but it remains just underneath, and it is challenging that level. One thing that is becoming increasingly interesting, though, is this VIX index of options volatility is the lowest since 2007. And obviously we know that in 2007 is around about when the market highs were seen. So they very interesting moves there. Very low volatility. Some would say complacency building up in the options market there, but very something that certainly I think we need to be looking at and keeping a note of. 10.7 there, it's just fallen well below that 11 mark that was seen at the end of Q1 2013. So a very sharp dip down on Friday on the VIX. In terms of the dollar index as well, just very interesting. We had on the sharp move that lower there. That was on Thursday after the ECB. A slight bit of a bounce on the back of non-farm payrolls on Friday. It's a bit of stability coming back in. There had been an early shift away from the dollar, but it's just fighting back in the last few minutes and sort of stabilising, I think you would say, at the moment. And that could have an impact on these currencies, Forex majors, as the week goes on, and also gold, I believe. So just keep that in mind. There's not a great deal of economic data out today for you to get too worked up about, but there are a couple of Fed members, James Bullard and also Rosengren, speaking this afternoon, and that could have an impact on the dollar. So my chart of the day is today's silver. I've been watching recently as silver broke below that key 1880 support that had been holding up the price, but that broke down at the end of May, and it's sort of now had that little bit of a pullback rally. It's back into a resistance band, 1880 up towards that 1918 level, 19 also 1940, 1917, 1918, and Friday's high was 1918. So you get a gauge that that's a bit of a resistance area now. You've also got this downtrend resistance coming in. These couple of highs here hit the 55-day moving average, which seems to be flanking this downtrend as well. So you've got a couple of levels there. Around 1944 is where that moving average comes in. That downtrend also comes in around 1928. So you're not expecting to get too much higher than here before maybe this selling pressure resumes. Again, you've got these momentum indicators that are all in bearish configuration. The RSI is just unwinding back towards 50, which would probably give us a selling opportunity. That those MACD lines are barely moving, remaining in bearish configuration as well on the daily chart. So it just suggests that this is going to be just another chance to sell, I think, on silver, because I think there's going to be further pressure. That breakdown below 1880 was a key move. That support had been holding for some time. Dating back to the end of last year, and the breakdown, I think, of 1880 opens this key June 2013 low of 1819 ultimately. So I think there's going to be further weakness in due course on silver. and I think this rally is a chance to sell. Okay, well, I wish you good luck in your trading today, and I will speak to you later. Thank you.